All right, good afternoon, everyone. Futures Barizio here, just about 4 p.m. on Wednesday, October 22nd. Hope everybody's doing great. And just figured I want to jump in here and make my daily video. And we're going to focus a little bit on seasonality today, especially in light of the fact that, as I've been saying, that we don't have any COT data that we can use due to the government shutdown here in the US. And so I started poking around a little bit more on seasonality. I found some interesting things I wanted to show you. So we'll take a quick look at the charts in terms of where things are at today. But we're also going to focus a little bit on this. So let's start with the seasonality. So you guys have seen, I've talked about this. This is insider-week.com, which is a free website. You do have to register an account if you want to get more in-depth information, but it is free, and it's a great site for free. Honestly, the data is really good. And this is their seasonality chart. And we're going just for the sake of ease here, we're going to focus just on soybeans, okay? And so you can see this seasonality map. And again, they show this red line is year to date. You can see the key under here. The blue line is 5-year average. The green is 10-year. And the orange is the 15-year average. And they just overlay them. And you can turn on or off any of these various time lengths if you wanted to just to see previous or a particular period or periods, okay? And what I wanted to, kind of have you just look at here with this is to catch your eye on areas where there's a lot of agreement. So you can generally see, an uptrend essentially in soybeans from around, early to the first, couple weeks of October, basically running through uh, the beginning of February, or at the very least into early January. So somewhere between, early January and early February, depending. And you can also see a kind of general downtrend here running from about June down through the end of July. Okay, this year we had a big spike come the end of July, but the downtrend generally did go. Now, of course, there are big spikes within here. Um, these are monthly views. You can see the key on the bottom. Each one of these vertical line separators represents a month. So certainly within these months, there can be days or even a week where price may do the opposite. That's almost just natural trend aspects. Trends don't go in a straight line, right? They have corrections, pullbacks, and then they continue on. So, but just generally speaking, you can kind of see for soybeans, those are the two areas that I kind of can see. Okay. Now, I found a couple of other sites. This one is forecaster.biz. I just found this doing a Google search on soybean. I just Googled soybean uh, seasonality. And the one thing to kind of point out here, now they show uptrend on, here's that, early October turn that we saw on the last chart, but they show this basically continuing all the way through into spring, which I think is a little aggressive. But this is this again, putting aside the 5-year line, because obviously we don't have that projected into the future because it's the red line, which is current year. But you see the 5-year line is this brown line. 25 years is this, and if you hold the mouse over here, it'll highlight it. 25 years is this dark brown line. But if you just look at the 5-year line, you can see they're showing basically a move up basically through, into spring, which is definitely different than this. I mean, if you look at insiderweek.com, theirs shows more of a flattening once you kind of get past January or February, whereas this website is kind of pointing more towards, it going up. But you do see this drop. This is the same type of drop that you see on the last chart, basically starting from, May through at least the end of June or, end of July. Okay. So there is some agreement, but there's a little bit of difference too. I don't know exactly, why there would be different, at least on the same year look back. Like if you wanted to just, this chart doesn't have 25-year data, but it does have 5-year data like this one does. And so if we go over here and we turn off everything but the 5 year, you can see that general upturn. Maybe it's just the way they have this chart graphed out, because it's, the scale, it's kind of flattening this out. But remember that, like I said, they're showing it basically uptrending all the way, into all the way into the spring. And so that's a little bit different. So let's just turn these back on. Okay. But in general, you can see, at least on the conservative side, that they're in agreement. And then we go to this website. Now, this is seasonx.com. This is a paid website. I did not subscribe. I signed up for all right, good afternoon, everyone. Futures Barizio here, just about 4 p.m. on Wednesday, October 22nd. Hope everybody's doing great. And just figured I want to jump in here and make my daily video. And we're going to focus a little bit on seasonality today, especially in light of the fact that, as I've been saying, that we don't have any COT data that we can use due to the government shutdown here in the U.S. And so I started poking around a little bit more on seasonality. I found some interesting things I wanted to show you. So we'll take a quick look at the charts in terms of where things are at today. But we're also going to focus a little bit on this. So let's start with the seasonality. So you guys have seen, I've talked about this. This is insider-week.com, which is a free website. You do have to register an account if you want to get more in-depth information, but it is free, and it's a great site for free. Honestly, the data is really good. And this is their seasonality chart. And we're going, just for the sake of ease here, we're going to focus just on soybeans, okay? And so you can see this seasonality map. And again, they show this red line is year to date. You can see the key under here. The blue line is 5-year average. The green is 10-year. And the orange is the 15-year average. And they just overlay them. And you can turn on or off any of these various time lengths if you wanted to, just to see previous or a particular period or periods, okay? And what I wanted to, kind of have you just look at here with this is to catch your eye on areas where there's a lot of agreement. So you can generally see, an uptrend essentially in soybeans from around, early to the first, couple weeks of October, basically running through the beginning of February, or at the very least into early January. So somewhere between, early January and early February, depending. And you can also see a kind of general downtrend here running from about June down through the end of July. Okay, this year we had a big spike come the end of July, but the downtrend generally did go. Now, of course, there are big spikes within here. These are monthly views. You can see the key on the bottom. Each one of these vertical line separators represents a month. So certainly within these months, there can be days or even a week where price may do the opposite. That's almost just natural trend aspects. Trends don't go in a straight line, right? They have corrections, pullbacks, and then they continue on. So, but just generally speaking, you can kind of see for soybeans, those are the two areas that I kind of can see. Okay, now I found a couple of other sites. This one is forecaster.biz. I just found this doing a Google search on soybean. I just Googled soybean seasonality. And the one thing to kind of point out here, now they show uptrend on, here's that, early October turn that we saw on the last chart, but they show this basically continuing all the way through into spring, which I think is a little aggressive. But this is again, putting aside the 5-year line, because obviously we don't have that projected into the future, because it's the red line, which is current year. But you see the 5-year line is this brown line. 25 years is this, and if you hold the mouse over here, it'll highlight it. 25 years is this dark brown line. But if you just look at the 5-year line, you can see they're showing basically a move up basically through, into spring, which is definitely different than this. I mean, if you look at insiderweek.com, theirs shows more of a flattening once you kind of get past January or February, whereas this website is kind of pointing more towards it going up. But you do see this drop. This is the same type of drop that you see on the last chart, basically starting from, May through at least the end of June or, end of July. Okay. So there is some agreement, but there's a little bit of difference too. I don't know exactly, why there would be different, at least on the same year. Look back, like if you wanted to just, this chart doesn't have 25-year data, but it does have 5-year data like this one does. And so if we go over here and we turn off everything but the 5-year, you can see that general upturn. Maybe it's just the way they have this chart graphed out because it's, the scale, it's kind of flattening this out. But remember that, like I said, they're showing it basically uptrending all the way, all the way into the spring. And so that's a little bit different. So let's just turn these back on. Okay. But in general, you can see, at least on the conservative side, that they're in agreement. And then we go to this website. Now, this is seasonx.com. This is a paid website. I did not subscribe. I signed up for a free channel. A free 1 month on this. And again, here is that kind of like, late summer, early fall rally. And here, so here it is, through the end of the year. And then if you come back over to the other side of the chart, you can look, and then there's that kind of rally until, like I said, January, February. And then we have this kind of sideways, and then here's that drop from, say, in this case, June through, say, late July, early August. So again, pretty consistent, a little bit different on what happens, at the beginning part of a year. But other than that, it's pretty consistent. And this is we're looking at 10 years right here. Now you can adjust this if we want to look at 5 years. It doesn't really change that much. It becomes a little more volatile, but overall the direction's pretty much the same. And if we look at 25 years, it's going to flatten it out. Obviously, it's just like if you put a moving average on your chart, right? The longer you make the moving average, the flatter it's going to be because it's not taking into account, it's not weighing as heavily all the current volatility. So, the longer you stretch this out, the better. But in general, it's pretty much showing you the same thing. All right. So I wanted to just show you that at least for soybeans, these 3 websites for the most part, are showing you the same general seasonality trends. Okay. However, if you go to, I also Googled, when I Googled this is the Chicago Mercantile Exchange. This is the official exchange website in Chicago, here in the U.S., where these grains are traded. And they have this page here on seasonality. And I read through this. It's pretty short. It's only literally like 1 page here. But it really kind of shows actually just the opposite. They get into discussing old crop versus new crop. And essentially what they're showing for soybeans is that, and what they're saying in this, in the body of this here, is that essentially old crop is the remaining inventory from the previous planting season, right? So you think like, okay, you plant a bunch of stuff, okay, you harvest it, and then it gets to be by the time you get around to the next year when you have to replant again, then all the product that you had harvested the previous year, you're probably running out of, right? And that's why you plant again, you have a new season, and you have what they call a new crop. Okay, so you can see here on this, without getting into all the wording on this page, you can read it if you want. It's literally only 1 page. They're talking about old crop. So because the harvest is basically towards late in the year. So when you get into the spring months, you have old crop, therefore less inventory, therefore price should be going up. And then that kind of peaks and then starts to come down as they begin to harvest new crop later in the year. They show prices going down. And you can see on this basically down through, the end of the year, and then again, a spilling over into the following year. Like this is December, you flip back around to January, and you can see price coming down in only, around, mid spring where you see stock price coming up again. And that's what they talk about here. And like for soybeans, they're saying that harvest months for soybean are November and December. Okay. And when you take a closer look at the grain markets, old crop and new crop months, you'll understand why that's okay. During the old crop months, when supply is typically lower, grain tends to be priced higher than the farther out new crop trading months. Okay. When a crop is harvested, there's once again a higher level of supply. This is why many grain markets tend to reflect their lowest seasonal prices during the new crop trading months. Okay. So what that is saying again is what's reflected in this, which again is decreasing prices from essentially about July through the end of the year. But we just saw on these seasonal charts, on 3 different seasonal charts, we see kind of just the opposite, where price actually bottoms out in August and begins to rally. Where on here, it's literally showing, the way I'm seeing this, just the opposite, where it's showing prices peaking in July and beginning to fall off through the end of the year. Okay. And then remember when we looked at this, we were talking about prices dropping essentially from, let me just refresh this page. Let's go to a different one. Prices dropping essentially from like April, May down through August, right? Prices going down. But when you go over here, it's pretty much the opposite. Here's, May right here all the way through into the summer. We show you prices going up. Okay. So, I really kind of struggle with this in looking at this, because if we look at if we look at this, and this is showing, this is just, I'm just trying to see what this is showing here. Then we're seeing really just the opposite of what the seasonal trend of soybeans. Again, this is season X. And again, it's pretty much the same thing, right? Where we have soybeans, going down when this is showing it going up, and going up again late summer into the end of the year, where on the CME website, late summer through the end of the year going down. Okay, so I need to think about this a little more. And of course, this is price on this axis, right? Here's time, here's price. That's very clear, right? What we're looking at. Okay, where we come over here, we have this axis, and then over here, this really doesn't have an x-axis here. It only has the time on here. Okay. And so that is a little bit of a conflict. But if we go by the seasonality charts, I don't know, maybe this data on the CME site is old. Maybe, I don't know when the last time they updated this. There's no date on this page. So I don't know when they created this. Or maybe, I mean, I'm not being conspiratorial, but it's like, maybe they purposely say all this to throw off traders. So so I don't know. So they make more money on your losses. I don't know. It doesn't seem to be right, because it's a literally mirror opposite of what the seasonal charts are actually showing. And I don't think there's any reason to think any of these seasonal charts are not being right, because this is all based on price, right? I mean, this is literally just taking price data and plotting it over time, taking basically, an average in any given time period over, the current year, which would be the actual price, and then a 5-year average, in this case, a 5-year and a 25-year average, for each one of these months, just looking at it essentially day by day, because in between each of these vertical lines is a whole month. So this essentially represents 30 days. You can see if you roll your mouse over this, this is 30 days. So it's basically just averaging out 5 years of price data, like at this point for November 26th, that same date on the calendar for the last 5 years and averaging out where's the price. And, this is where it would be. Okay. In this case, 25 years of data on this brown line. Okay. And so, I did want to just talk about that, and you can do that for any of the grains. This forecaster.biz, I think it's a free site. I think if you register, there are some paid accounts. You can see right here it says pick a plan. They do have a paid version that will show you more stuff than this. I did not sign up for this. There's no trial version. And so you can see here, they throw all this in, and it's basically, if you sign up for a quarterly plan on the basic service, it's 85. Well, looks like euro, so this must be a European website. 85 euros, whatever that comes out to in US dollars. And it's what you get. But I mean, at least for what I'm looking at here, I don't need that. Seasonax, like I said, is a paid site as well. But I just signed up for a 1 month free. But to be quite honest, the seasonality chart is on insider-week.com. The seasonality section, to me, is going to be just as good. And it's free, So, this is a free site, and I think this is just as good as anything else that's out there. So, and yeah, I guess what they're looking at here on this axis is just percent, how much the asset gains. It's not the raw price, it's just percentage increase. The red just represents the current year, I guess, but you can see, these are relatively close scales. This is just representing the general increase in price, just through trends. Again, it's not showing the raw price, but it's just showing, it's just showing the percent increase. Okay. So anyway, it's just something interesting. But if you're interested in seasonality, these are just a few websites. You can probably Google it and find even more. I found some other ones that they put it in like table form instead of like graphical form like this. And I find that completely useless. I mean, you need to be able to visualize over time and not just look at something in a table. That's not really going to be very helpful in my opinion. But there's probably more sites. These are just a few that I found very quickly, just, Googling the term, soybean seasonality chart or something like that. And this is what I came up with. So, all right. So if we go over and just take a quick look at charts here, just switching gears. I guess we'll start here. This is crude oil, just kind of changing gears here in terms of seasonality. And of course, you can do seasonality on crude oil too, because there is a seasonality component with energy markets too. And you can see with crude oil, we've been, really heading down here. We've scraped these lows down here, as I've been talking about. We made a couple of attempts to go lower, and you can see this is the 4-hour chart. We've kind of rounded the bottom right here, is like what I like to say, where you kind of see these lows where you see, a little higher low, then a stab lower, and then the next low again fails to come down. This is really the key one right here that fails to break, and it actually closed more bullish. I have this set on Heikin-Ashi candles right now, guys. That's why it looks a little different. I like using Heikin-Ashi. It's not good for entries and exits per se, because it doesn't show the actual price. It shows an average of the last couple of candles, so you're not seeing the real price, quote unquote, here. But it's good just for visualizing trends and filtering out noise. You can use it for entries and exits on short time frames if you go down to like a 5 or 10 minute chart. But because it's not showing the real price, it's difficult. So, I have templates for this and just regular candlesticks, so I can just very easily flip back over to regular candlesticks if I want, or just open another instance of the chart with candlesticks. But I wanted to just point out that you can see since we hit this low, we've had nothing but bullish candles on the Heikin-Ashi chart, okay? And you can see they're pretty big candle body size. There's no wicks on the bottom for the most part, which in an uptrend, that represents strong upward action when there are no bottom wicks. There's always going to be top wicks on Heikin-Ashi candles when the price is going up, especially. You'll have top wicks that can have something to do with price rejection, but it's not totally because of because there's a big wick, it meant that price got rejected off of here. But it's just the way Heikin-Ashi candles are displayed. But what you really want to look for in an uptrend, you want to look for the lack of wicks on the up candles like these. Okay, which if we come over here on this downtrend, these purple candles, you can see this strong downtrend. There's wicks on the bottom of all these candles, but there's none on the top. Okay, this just indicates a really strong downward price momentum. When we came down here, we had a lot of indecision, small candles, maybe there's a little accumulation zone, and boom, we've popped higher. We have not had one red candle on these Heikin-Ashi charts in a couple of days now. So I drew these two red lines on the chart prior to this. Actually, I drew it when price was sitting here a few hours ago, and you can see we did pop higher, and I was saying, okay, well, where is kind of our market structure shift? Well, theoretically, it was right here. Although no new low was, well, I mean, technically a new low was put in on this candle, but didn't close there. So theoretically, this was actually our market shift right here. But I'm not really too, because this was such a small pullback, and since we did not actually put in a new close here below this level, I kind of ignored this one. So I said, okay, well, where are the places where this down trend would be voided? And I said, well, there's an area here and there's an area here, and you can see we popped through this one. Now we're up around this one. So basically at this point, what I'm looking for is to have price, if this uptrend is going to continue, have some degree of pullback here. All right, at some point, I don't know when, but I'm assuming, sellers will make an attempt to come back into this market and attempt to push prices lower. So I would expect some sort of pullback here coming, and then, wait and see if we get a shift and see prices stop popping higher. And if we do eventually take out this high, or at least this wick right here, that would suggest that this downtrend could be over in crude oil. Now, from a seasonality standpoint, basically now through early December, we generally see lower prices. Okay. And generally we see the downtrend go basically July through early September, but maybe we've just kind of pushed that ahead because, usually we get lower prices through early September, and then starting October, we get another push down, and we have seen that, but now this is saying, through early December down, but maybe, because prices have been going down for so long, maybe we will get the shift. So that's why from a seasonality standpoint, you have to, don't trade it blindly. From a technical standpoint, let's see what happens. It would be nice if we had commitment of traders data. That would help us decide whether this technical picture is playing out or whether it's a seasonal thing, whether we're still following the seasonal pattern and things have just shifted forward a little bit. But we don't know that yet because we don't have the COT data. So we can't look at it. Everything now is we're more than 3 weeks old on the last COT report. That's pretty much useless at this point. So, all right. So, but this is interesting with crude oil. Maybe we have hit a bottom here, a little rounded bottom right here, which would make sense that we see this little slow turn back up and then a very bullish run. And you can see, no bear candles in here. Like every time it's pulled back before, these are short-lived pullbacks with lots of wicks and red candles scattered in here because the sellers were still running things. Or like I said, just very few candles. Now we've had an extended run here of bull candles. We've now taken out at least 2 liquidity areas and have challenged a third one. Okay. So, I mean, I didn't trade this, but basically if this comes down and then pops, and then it looks like we pop a higher low and then start to turn up again, that would shift me more to a bullish side on this market. Okay. All right, on to corn. Again, I have Heikin-Ashi on here, but just for the sake of trend, remember that corn from a seasonal standpoint and our last COT data also pointed to higher prices. Here is the 4-hour chart. We did have this push up, which did not break out of this kind of sideways congestion area. We're still trading inside of basically this larger range that's been going on since, basically since late August. We've been trading, if we look at it from about this area to where we are now, and at the very least, since the beginning of this month, we have not broken out of that. But if we just look at recent price action, again, we have had a very bullish run up here. You can see again the Heikin-Ashi candles with no wicks on the bottom. We've had this pullback, and it looks like now it's trying to push higher. Okay, it is trying to push higher, and maybe what I would expect is that when price gets up here, which it's pretty much there now, or it will be like tomorrow, that we'll see another pullback here. But I do expect that obviously if this uptrend is going to continue, and this is just kind of a resistance area, we'll see price come here. Sellers will try to come in. We'll see a pullback of some kind here, to some degree. I don't know how deep it'll go, but just for instance, and then we come here and smash through these highs. I think that would definitely confirm. So I do have a long position on in corn. The market's closed for the day, so I'm holding that through. I'm holding that through, but I do have a long position on that I took earlier today. I was a little late on entry, so I do expect that probably have a little bit of drawdown, but this does look like we're going to see some kind of continuation here. So, but I do expect to see a pullback before we make new highs, just because this area is definitely a resistance area that is going to be seen by a lot of people, and the sellers will try to sell off of this zone, or longs from down here will take profit up here at the next convenient resistance area. So do expect a pullback. Wouldn't be shaken out by that really, as long as these lows down here hold. Then this uptrend is still valid. Okay. Okay, soybean meal is, you can see I'm still holding longs on soybean meal. Here's my entry on this green line. I entered this back last week and I'm still holding it. And you can see, and again, remember that soybeans are, as we looked at with the seasonality, are in a bullish stance. And, so again, we don't have COT data, but clearly from a technical standpoint, we have, are still trending up here. And you can see where my entry was down here. I'm holding this position. I probably will move my stop loss again. I can't move it now because the market's closed, but I moved it here. I'll probably move it up to just below this swing low and just keep, trailing it behind the price in case, we do have any type of, major down move out of the blue, that, I protect as much of that profit as I can. But again, seasonally, we are in an area where we should be going higher in the soy complex. And so that's how I'm looking at this right now. Okay. Soybeans is the same way, that I don't have the chart up right now. We will look at soybean oil though, because that one could be more of an outlier, which is curious, because you would think they would all kind of move together. I mean, they're all soy products. So we'll talk about that in a sec. Just a quick look here at the Australian dollar future, switching gears, switching markets. As I mentioned yesterday, we're kind of dead in the water on the 4-hour chart between these two zones. This is just garbage. I'm not interested in trading this at all. So really nothing to look at until we start trending again. I'm really not interested in any of this on any time frame. So we're not going to spend a lot of time on that. And then in terms of British pound futures, again, from a 4-hour chart, we need to fix this trend line. Now you can see on the 4-hour chart, we had this bullish move up. We had fairly aggressive buying here with, again, very few wicks on these bull candles, except at the top and the bottom. And now we've had this move down, which has been moderate. I wouldn't say call it weak, but I wouldn't call it super strong. These candles don't have a lot of range, but there are some flat tops though. And then we had this blow off bottom right here. And then we've had 3 consecutive blue candles. And so I did take a long on this today. It's about sitting at break even. I'm gonna hold it because it's on my funded account. Did not take it on my personal account, but um, we may be seeing you know, potentially seeing a turn to go higher on these British pound futures. We did go down and take a stab through the 61.8 Fibonacci zone again for what that's worth. And so, you know, let's see, we on the 1 hour chart, this move back up has been very aggressive. I mean, look at these sides of these candles with no bottom wicks on these Heikin-Ashi candles, suggesting pretty bullish price action. And, you know, the last 3 hours has been pretty quiet, but look how small these bear candles are. This looks like, you know, classic kind of resistance play near the trend line. But, you know, so if we go up and not just poke through the trend line, I'd probably want to see like take out this liquidity right here to see price break through this area. That would definitely push it higher. So what I would expect on this, if the price is going to maintain more bullish, is that from here we'll either pull back and then go higher, or we may take another little stab at another high and actually tag the trend line. Maybe it won't. Maybe it'll just come down and correct from here. But either way, you know, some sort of pullback and then a breakthrough. And if we, you know, certainly if we get through this high, that would be pretty bullish. But even if we take out this high uh, or this high, if it comes back and tags the trend line, any break from there is an aggressive change of direction. But certainly here above this high, because this is the last real major swing high that led to this low, would mean higher prices. So we could be in a transitionary period here in the British pound futures. So let's see. Like I said, I am holding a long position and that. We'll see how it goes. And then lastly, like I mentioned about soybean oil. Now we talked about soybeans and soybean meal being bullish, but look at soybean oil. If we go to the 4 hour chart, we are just kind of meandering here. We're not really making much progress. Price technically has been trying to move higher. We've had higher lows being put in, but we've really have not, you know, after these couple of attempts right here, we have not been able to really go any higher. All right, so we're kind of sitting with something like this in terms of technical levels, right? We got something like this going, okay? Now you can see price is certainly right now. The market is seeing this trend line again. Trend lines can be really self-fulfilling prophecies. You can see right higher low, tagged off the trend line, up, tagged the trend line, tried to go up, tagged the trend line again, up, came back, and you know, currently tagging the trend line. So again, as long as we hold, say, like this area right here, then we can expect to see a bounce at least off this trend line to go higher. I mean, you might stab through here a little bit, try to flush out longs if anybody has stop losses sitting right below the trend line. So I wouldn't be surprised if it tries to go lower, but as long as it holds this area and snaps back into the range, then we probably will go higher and at least come back to the top of this range up here. But again, from a seasonality standpoint, we should be going higher. So what's going to be the catalyst? Will we finally see this bounce? One of these trend line bounces lead to a smash and an actual move higher, because this is really kind of junk, you know, especially since the beginning of October. This is really doing nothing. I mean, we're essentially, since at least this area here, which was back on like October 8th or 9th, we've been trading inside this range, right? High, low, high, back to the low, trading inside the range. Even if you don't want to even follow this, but I have this drawn because you can see this is a very clean trend line you can draw here using the Heikin-Ashi candle. So this one's a bit of an outlier because it's not, soybean oil is just really not picking up on the bullish momentum that soybean meal and soybeans are showing. So is this going to continue? I don't know. I mean, if this continues to go lower, that'll be a little concerning for me with my soy meal long position, because you know, I don't know if this is just a harbinger of real weakness in the soybean market, or if this is just an outlier, and eventually this will catch up and bounce higher. You know, we'll see what happens. But but generally the seasonal patterns are in favor of soybean oil. However, if we look over here, soybean oil, whereas soybean meal and soybeans generally, are in an uptrend like through January, as I talked about, soybean oil, you can see right here, is generally the uptrend runs out of steam around mid-November, okay, according to Insider Week's charts, okay? So it could just be that soybean oil is just a laggard, right? It doesn't maintain that trending phase the way soybeans and soybean meal does. So it could just be just a feature of soybean oil. I'm not knowledgeable enough about the kind of the underlying fundamentals with it, but that could be the reason why. If we look at soybean oil again on this chart, seasonality, let's let this draw out here. We'll see what I'm talking about here in terms of, you can see here around mid-November, historically this thing tends to run out of steam, and then it tanks all the way down into like mid-December, and then it does try to pick up again from like mid-December and just kind of tries to strengthen through early February. So it could just be, again, we've just kind of pushed things forward a little bit where, we're a little early for this move down, right? Normally we see this thing peak around the beginning or early November and sell off for about a month. Well, maybe we're in the sell off